All right. Do you have any kind of limiting belief that you're kind of struggling with right now?
Um, I would say the biggest thing is similarly like real estate. So real estate has given us a platform and an audience to hopefully influence and have an impact, not just in help them with real estate, but in other ways. But my limiting belief is probably, have I earned the right to have that platform? What will people think of me? So is that my ego getting in the way of what will they think of me? And am I being humble, honestly? So I would say I worry about what other people might think of me. But if I really go back to my core and as a man of faith, my identity is tied to that less than it is to what other people think of me. So that's how I get through that. But I know I just need to keep moving in that direction and testing myself because that's also what leads to growth for me.
That's exactly right. Yeah. Yeah. So back to that first deal. You must have raised some kind of money. How did you guys come up with the equity? And you mentioned you had two or three other partners. You brought in someone more experienced. How did you overcome? Because I hear a lot of people, I'm like, I'm going to need a lot of money. I don't have all that money, and I've never raised money before. I don't want to beg my friends and family for money. How did you overcome the capital part of this?
Yeah, so we didn't raise capital on that deal, and we didn't raise capital, I think, for probably our first 7 or 8 years. In hindsight, that probably maybe slowed us down. But the first deal, I mean, it was Michael, it was 48 units. It wasn't a great town. There was probably mistakes. We bought it was in contract for $680,000. I don't even know what that is, 16 a door. We put
Wow.
120K into it, but we were able to bring the down payment with the bank only required us to bring 25% down, funded the whole capital plan. So we bought that and sold it 13 months later in 1031. We did a tick, separated out in 1031 into a 72 unit, just my business partner and I. And then off to the side, my one business partner and I also bought a 16 unit, a smaller one that we had to bring 45, I want to say 45K down or maybe 90K total, 45 a piece. And we were able to fund that. We did do we were starting to sell some single family. Our strategy after the first one was clear because the light bulb of, oh, this is how value add works, which is a major, major, major game changer for multifamily. I would say the single biggest thing that resonated or clicked with us. So because of that, we started to sell some single family homes that we had and
Mhm.
1031 into the multifamily or cash out and do cost segs, different tax strategies to convert our single families to multifamily.
Yeah, that's interesting. A light bulb went off. So at one point, did you start raising money then? What was happening when you're like, all right, let's get into this thing?
Yeah, I mean, really in 2021, I left my W-2. 2022, I was really trying to figure out, okay, what direction, what do I want to do? I started investing in some passive deals at that time. Talk about a good time to invest in passive deals, right, Michael? 2022, 2023. Overall, they're
Oh,
going pretty good. We stuck to fixed debt and, we have plenty of non-distributions and some other stuff, but we learned a lot through that process. After I did that, I was like, man, I can do this. We can have control. We have the knowledge. I can give investors really good returns that don't even have exposure to this in our area. So that's when I said, okay, I want to do this. So our first deal that we did with private capital wasn't until early in 2024, actually. So we had done real estate meetings, just trying to do the right things. We were able to raise the capital relatively easy in hindsight. But it wasn't until 2024, 7 years in. I told you, Michael, I am a
you
slow,
are a slow learner.
slow
Oh, geez.
learner.
Oh,
Seven
my
years
God.
in, we started doing that.
You get there eventually. But now, looking back on your career, when you say you're a slow learner, we said tongue in cheek a little bit. But if you could speak to your younger self, what would you tell yourself? Like when would you speak to yourself, and what would you say?
Yeah, I think people, first of all, I'll say this to before I get into that answer is people say like, well, what do you regret? I think things happen for a reason. I don't regret it. There's probably lessons I need to learn that if I did it faster in a different way, maybe I wouldn't have learned those lessons or it could have been a disaster. Who knows what, right? So I don't really, I mean, I don't regret things necessarily, especially from a business perspective, but I'll say that each time, like 2011, like, hey, just go buy one. The risk of a single family, what's going to happen? You have a good job, like you'll be fine. Like go a little bit faster. And again, I don't regret it, but if I would have pulled everything ahead 2 years, that's my financial path would have been 2 years ahead. That could have a big impact. It is what it is. No big deal. I would have started multifamily faster. I think I think single family doing one, I don't know if this is against the rules for this podcast, Michael, but doing one or doing a duplex first isn't a horrible thing. You can learn from that. Just don't stay there very long, right? If you do one, go to a 4 unit and go to an 8. And I don't think, I mean, if you to do one to go to a 100 unit with private capital without the right support staff, network, association, coaching, I think would be a very risky move. Now, if you do that and you have the right team around you to support you, that's a different story. But if you're on your own doing it, a single to a 4 unit to a 16, maybe to a 48 and then you can get to the hundreds. But I would have went to that faster. Hindsight's 2020, but multifamily just brings a whole nother level of value add, scalability, time versus money benefits that I didn't recognize until, well into it.
Yeah, you and me both. What about raising capital? Would you have raised capital sooner?
Yeah, that's a good question. I think I would have. I think I would have. I mean, what's nice is those properties we bought from 17 to 21. I mean, I own 50% of those. So that certainly is nice. But I'll also say that, yeah, I think, 2019, 2020 for sure, there could have been an opportunity to really raise capital. But in hindsight, it's hard for me to go back then. And I think I would have structured those deals where they would have been conservative and safe, especially for what we bought. So yeah, I don't regret it, and I'm in a financial position now that I'm very, very grateful and appreciative and thankful for. Um, but I definitely could have accelerated things by raising capital. Yes.
Yeah, these are all lessons that we learn. I agree. I don't regret anything, perhaps, but simply, one of the things I did not do well that didn't really surround myself with experienced people. You
Yeah,
know,
I would say that.
engineer. I'm so smart, Phil. I can figure things out on my own. I really don't need someone to help me with
Yeah.
this thing. Man, gosh, I lost so much time and so much money trying to do that thing. It's wild.
Yeah, look, I'm working on an acronym and then like a matrix and writing a book and stuff, but I think there's 5 steps for everybody for success. And you hit on a lot of them, but you got to get clear on what you want, your purpose, okay? So I'm going to give you the acronym. It's going to be PEACE, okay? Purpose, educate yourself, association. And Michael, to your point on association, I missed it. I wasn't focused on that. I wasn't reaching out. I wasn't getting coaching. I wasn't getting mentorship. So all those things, purpose, education, association, lead to action, lead to courage, right? So the C is courage. And when you started to have courage and take action, that's when you can be an example to others and lead others and help others out. So the acronym is PEACE, purpose, education, association, courage, and example. And if you do those things, from a financial perspective in an area of life, I think you can have peace. Now, I'm not saying you have peace in your whole life. That's a bigger discussion. You have to have alignment of all your priorities. Probably spirituality has to be first. So there's some other things overall, but those 5 things I think are key principles for success that anyone should focus on. And if they do those, including the association, it'll give you the courage to act, and you'll accelerate. You'll accelerate your real estate or financial or business timeline, whatever that is.
Yeah, I love that, man. That's a great book because I agree. You can do anything in life if you follow those principles. You got to be clear, you got to have a purpose, and you got to educate yourself, build a team around you, take action that gives you confidence, and then you can be an example. I
I
love it.
pre- I love it. I appreciate that. Thank you. Thank you.